This conference will now be recorded.
Hello, everybody. Thanks so much for joining us. And wanted to make a couple of just housekeeping items. Waiting to hear back from Jason Zook with NASB to see where and when he'll be able to do that class. We're going to shoot for next week, but as soon as I have kind of final feedback from when his office is usable again, we'll get that class out to you guys just as soon as possible. So bear with us. We may have to do a last minute notice for that IRA lending class. For this class, I am very, very proud and excited to have Howard Goodman with us. Howard Goodman is I would say very similar in terms of how we operate our company with that family owned and operated feel. And I've been extremely impressed. And you guys know that I like to vet people and make sure that the feel is right before we bring them to you. And it's been just a fantastic experience so far with both accessibility and communication, and also knowledge and willingness to learn about the unique and different things that we are always trying to divest into. So we're going to talk a little bit about who he is, what he does, what type of information you need to know, and then really from there, we're as always going to answer your questions. Make sure you use that chat box to ask questions as we go. We'll get to them just as fast as we can, and we'll just kind of feed off that information and build the presentation from there. So Howard Goodman, thank you so much for joining us.
And thank you, Leah. And I want to thank you and OmniKey generally for allowing me to make this presentation to your clients, friends, and family. One of the things that I get very excited about is when I meet new clients like yourself, where I could tell a little bit about our firm, because we're not a standard CPA firm. A lot of people might hear CPA and think, oh, all they do is taxes, and that's pretty much it. But really what you'll see throughout the presentation is that I myself and my wife, who is my partner at Howard Goodman CPA, that we bring a unique set of experience and willingness to work with families and small businesses. So first off, as you had up, I think the next page, we could start with who we are, who I am. So again, my name is Howard Goodman. I've been a certified public accountant for about 30 years now. I'm originally from New York, but have been living in the North Texas area for about 20 years. And of course, I'm licensed here in Texas. The first 20 years of my career were actually spent with large accounting firms like Deloitte, and then on Wall Street, big companies like you've heard, like Lehman Brothers, Salomon Brothers, and Citi Investment Bank, which at least at the time was the largest investment bank in the world. And I started out as an auditor and then moved my way into operational management, running the private equity and technology investment banking departments at Citigroup. When the Wall Street crash happened, I thought it might be a good time to go out on my own and really hang out my shingle, which is what I'd always dreamed of doing. So I started doing a little consulting. I first worked with the FDIC, managing teams. Unfortunately, they were closing down banks during the banking crisis. But then what I did was I started working, or through referrals, I got in contact with some high net worth individuals and families that literally had dozens of LLCs and just wanted someone to come in from an operational perspective and do the books and do the accounting and take care of everything. So that's really where I first learned how much I loved working for individual families, couples with businesses, high net worth individuals. And that one-on-one contact was so much better than working for a large corporation. And of course, needless to say, I am a CPA, so I do taxes as well, both on an individual and corporate level. Finally, in part based on my experience in Wall Street, I actually have my Series 65, so I am a registered investment advisor. And there's a small boutique firm based out of Richardson called Seventh Harvest, and I'm an advisor partnered to them on the tax side. And again, I use their resources to help my clients to decide where to invest, what retirement plans to set up, et cetera, et cetera. My wife, Marianne, is not an accountant by trade. She actually has a master's degree in social work and spent much of her career actually working with brain injury patients and ultimately in healthcare administration. Her most recent job before coming to work for me was actually as a regional director for USMD, which, if you're not familiar with it, is sort of like a Baylor or Texas Health. However, as my business was growing, she kindly offered to help, and she has now been working with me for 5 years, trained up on QuickBooks, my tax software, et cetera, et cetera. And she also helps me with the administration of the business. She's also an expert in small business management and also does policies and procedures manuals for people, is an expert on Social Security, corporate insurance, anything that you can imagine that a corporate administrator might be an expert in after 20 years. So that's a little bit about us, Leah.
Fantastic. Thank you so much. So one of the goals of what I want to cover today is specifically for some of our newer investors, but also experienced ones, about the things that you need to know for your tax filings, for your entities. I get so many questions about how to hold property and what filing do you need to do and what do you need to do different in the state of Texas and income taxes and all these things. So one of the things that I want to spend quite a bit of time talking about is this age-old question: do I need an LLC? Do I need a property in my LLC? Now, what we're not going to address today are the lending differences. You all know that we've done many classes on that the last few weeks. We're specifically going to be looking at it from the tax perspective. Does it have to have a company? Do you have to have these properties in a company? And what are the pros and cons? So Howard, let's discuss.
Okay, great. I'm glad you actually mentioned that, to look at this from an accounting perspective, because ultimately LLC, as most of you probably know, is a limited liability corporation, and that essentially is a legal issue. Are your assets protected or not? It's not really a tax issue. Ultimately, if we're just to talk about taxes, it does not matter if you are investing as a sole proprietor or an LLC. In either case, your profit and loss flows to your individual Form 1040 on a Schedule C. There's also a Schedule E for rental property income, but that's another story. Right now, we're just talking about, is your income coming in as a sole proprietor or is it coming in as an LLC? So from a tax perspective, it doesn't matter. From a legal perspective, I leave it up to the lawyers. I have my own opinions, but I will leave that to the professionals.
Absolutely. And the thing that I always say is, do the pros outweigh the cons? So when we talk about ownership and whether we buy in a personal name, whether we put it through a company, obviously your loan terms are most advantageous in your personal name with Fannie Mae. And so it often comes down to, the lawyers are always going to say, put it in a company, put it in a company. But at some point, there's risk with everything in life, right? And so the age-old question is, do the pros outweigh the cons? And so for those of you that have specific questions about that piece, I can certainly direct you to some people who can assist you with making that determination. I can tell you that I personally have my Fannie Mae's maxed and do portfolio lending above and beyond that with my companies. So I still take advantage of all my Fannie slots as I 1031 exchange. And so it's a question and an answer you have to make for yourself as an investor and an individual with what your comfort level is. But most people do maximize their Fannie Mae.
Right. And going on to the next bullet points, which I guess are legal in a way. If we could go back to that previous slide. I was still talking a little bit about business. Great. Do I need an LLC for each property? Again, it's more of a legal issue there. From a tax perspective, as a tax preparer, I will tell you that I charge people more because if you have multiple LLCs, there's multiple sets of books and multiple Schedule Cs, et cetera, et cetera. So that's really the only difference from a tax perspective. Whereas if you're a sole proprietor, in theory, it's just all accumulated in one place, whether it be QuickBooks or an Excel spreadsheet. If you do have an LLC, is it worth it to convert that LLC or those LLCs into S Corps? That's something that I always tell my clients. If you have several $100,000 in revenue, it's probably a good idea to convert at least one LC into an S Corp and pay yourself a salary. The reason being is that if you pay yourself a salary out of an S Corp, the remaining income goes to you as a distribution and you don't pay self-employment tax on that, which runs about 15.3%. Again, I won't go into more detail than that for this presentation, but it's definitely a conversation that you would want to have with your CPA if you do have LLCs. If your company is big enough, if you have a large investment company and you're thinking about staffing, many people come and ask me, should they be employees? Should they get W-2s? Or should I just hire them as contract labor on a 1099 basis? I would tell any small business it is always, always much easier from a regulatory perspective, from a tax perspective, just to hire people if you can as contract labor and just pay them with a check essentially out of your checking account. As again, many of you know, whether you've been an employee yourself or whether you've already been an employer, the payroll rules are very, very strict, especially on a federal level. And boy, if you miss one tax payment or one filing, the penalties are just outrageous. So if you can avoid having employees, I suggest that you do. What are your obligations to the state if you do form an LLC? It sort of amazes me a little bit, the small businesses that come to me and then want to hire me as a CPA. And then I say, well, did you file your franchise taxes every year by May 15th? And some people will even tell me, what's a franchise tax or when was that? So it's very, very important, especially if you're formed in the state of Texas, to make sure that you are making your filings every May 15th. There's a small penalty for not filing, but there's a larger penalty if you actually owe franchise tax, which, by the way, you would have to have revenue of approximately $1.1 million before you actually owe the tax. That said, everyone still needs to file. Sales and use tax comes in, obviously, if you have sales where you're charging sales tax. Similar, you need to know what the rules are and regulations for the state where your company is based. Last question is, what is a registered agent? As you form your LLC, there's a question on the form that you file with the state. Who will be your registered agent? The registered agent essentially is just someone who gets the mail for the company, whether it's from the state, from the federal government or whatnot. So really it could be anybody. It could even be yourself. Some people might see services on the internet where they want to charge you $300 or $400 a year for a large corporation to act as your registered agent. Totally not necessary. There is zero value in that. Again, you could be a registered agent yourself. It could be your CPA or anyone else, and probably for free as well.
Absolutely. So let me ask you a question. I have a
Sure.
lot of clients who come to us. They've been working perhaps in other cities, a lot of people who've bought in other markets. And long story short, they come to us, they have an LLC, and the LLC has been forfeited. Can you tell me what that means, how that happens, and how you help our clients avoid that from happening?
Yeah, sure. Basically, when a business is forfeited, in theory, that means that you are no longer allowed to do business in the state that you're registered. To eliminate that or get the business back into good standing is really very easy, and it's almost immediate. So again, if I met a new client and they said, can you look up my franchise tax history at the Texas Controller website, and I get the login and it says the business is forfeited, it will show me which forms or which years of franchise tax have not been filed. I simply get the information, I file that information for them, and pretty much immediately, once you're caught up and you pay the $50 penalty for each form that hasn't been filed, they put you back in the good graces. So it's a pretty simple process, really.
Exactly. It's very scary to clients though when we have to tell them that their entity no longer exists right now.
Of course, and I'll tell you another story that's very interesting is some people, again, they form a business and they forget to file that first franchise tax report, and then they'll get a bill from the state of Texas saying you owe $3,000 in taxes, in franchise taxes. They'll say, but I just started my business. I don't even have $5,000 in revenue. How could they charge me this much? Do I have to pay this bill? Well, what happens is when you don't file a return, they look at what business you're in and they say, well, a person in this business probably has average revenues of this, so we'll just send them a tax bill and hope they pay. And so it's basically like a little game, but hopefully if you have a CPA or you show that to someone who knows, they'll say, no, don't pay that bill. Just go back, file the delinquent tax return, and you will owe nothing.
So for the clients that are hiring you to manage the taxes for their LLCs, you take care of walking them through all that and making sure that they know what needs to be done, and you assist them with doing that if they request. Yes.
Absolutely. And I never look to, just pull fees from my clients just because we're nickel or dime people. So I will send my clients a link and say, here's where you have to go. It's relatively easy to actually file this return and do the related public information report. And if you want me to do it, I will. And there's a nominal fee to do it. But I do encourage my clients to actually do it themselves. And of course, I do send out notices well before the due date, just letting people know they have that option.
Perfect. Thanks so much for clarifying that.
Sure.
So now let's move on to your bookkeeping services. So a lot of our clients, so we have integrated property management software and most clients
Mhm.
rely on that. But at the end of tax year, inevitably I get about 200 calls with, oh, I'm trying to get this into my QuickBooks and get my books in order, trying to make sure I have everything in a row. So tell me a little bit about how you help with that process.
Right, sure. So, as everyone knows, bookkeeping is sort of a commodity. You can get a bookkeeper just about anywhere at any time, pretty inexpensively. So the question is, why might you use my service, which may cost a little bit more? One of the reasons is accurate reporting in general. What someone told me recently, for example, think of three categories: good, fast, and cheap. Well, you can only get two of the three. You can't get all of them together. So, what I am is good, what I am is fast. I may not be the least expensive, but I'm not outrageously expensive either. But what you're getting is you're getting a CPA's experience to make sure that everything is accurate, especially going towards your taxes. Again, I could give you a number of examples of my interactions with people who are otherwise very good bookkeepers, but just aren't familiar with the tax laws or how to turn your books into something that will be tax advantageous. One bookkeeper I recently worked with, for example, they have all sorts of fixed assets on the company's books and never thought to calculate depreciation and take a depreciation expense. Another client, they were actually just starting with investments and they took out some loans from the bank and then, of course, used those loans to pay for some properties. And their bookkeeper, being unfamiliar with the business, recorded that actually as income and expenses when it has nothing to do with income and expenses. It's just a note payable, and then you have an asset for the property you bought. So a lot of bookkeepers that you'll find out there, they can do the data input and input your invoices, but they're not really keeping true, accurate books that could then be used properly for taxes.
So
Real
let's talk
time, I'm sorry.
about, let's stop on that topic for a minute and let's talk about rental property as it pertains to these books and depreciation. So one of the things that we talk about a lot, and I don't think that most small investors realize, is the difference that owning rental properties makes on your taxes. So let's take a moment and kind of delve into that a little bit. So looking at single family properties, it's more than just the income you get from them, the equity pay down on your mortgage principal every month. What does it actually affect with your gross income and the taxes that you're paying by owning rental property?
Well, sure. When you have a rental property, those are reported on Schedule E of your 1040. And what I tried to make sure, and the important thing is to get the deductions that you can get from owning that property. Some people, again, if they're novices, they may just say, I have some rental income and I'm just going to throw that on there and now I pay taxes on my income. And they might think of some of their expenses like utilities or whatnot. But one part of what I do with my rental property owners is I make sure they really look at it as a business. So that means that you could take things like your cell phone, for example, that's a business expense. If you are traveling in your car or an airplane, depending on where the property is, and you have travel expenses or mileage on your car, those are deductible expenses. It's not only the utilities or repairs and maintenance on the property, management fees, et cetera, et cetera. So part of what I do is I look at every potential deduction, aside from the depreciation that comes with owning a rental property. So those are some of the keys. The second thing, ultimately, the goal often is to actually sell the property, whether you're flipping or you've just held a property for a long time and you're looking to whittle down your portfolio. The key is to have a CPA who understands what basis is, that understands that major improvements that you do on your property should be added to your cost basis. So in the long run, your capital gains go down and therefore your taxes go down.
Perfect. I appreciate you going into that. That's something that a lot of our clients are dealing with right now as we do all these 1031 exchanges and these quick
Mhm.
sales. And many of my clients are working with CPAs that seem to be missing quite a bit of what residential real estate and even commercial and multifamily real estate allow to help you with your cost of taxes.
Right, exactly. And something that may be basic to me, quite honestly, because I've been a CPA for a long time, I have to remember to tell my clients things that I think are basic. For example, hold that property if you can for 1 year so that it's a long-term capital gain and not a short-term capital gain, which lowers your taxes significantly. And that's just one example.
Exactly. All right, perfect. So moving on, what are some of the other bookkeeping services that you offer?
Sure. In general, the second bullet point that I had on that slide was real time. So what that means is a lot of people may hire a bookkeeper, and again, because it's a relatively inexpensive service, they may say, just come in at the end of the month, and you could do my books once a month, and I'm fine. When people hire me, it's like it's almost like fractional bookkeeping, meaning I'm your employee and I do everything real time. So what I do for most of my clients, if I have access to that business bank account or credit cards, I literally look at that or download it on a daily basis into QuickBooks so that you can call me any day at any time and say, where am I today? It's not bunched up. It's not a matter of me taking vacation and maybe I'm not around that month. So you will know exactly how your business is doing in real time, and I can provide you reports for one business or all of your businesses whenever you need it. The monitoring each investment, again, just I'm used to dealing with people with multiple LLCs and multiple properties, so that's not a problem. And the key is one of the things I mentioned before is that my services, it's integrated with tax preparation if I do the taxes. Right now, if you have a bookkeeper and you have a separate CPA doing the taxes, I am sure that you get questions from your CPA and they may come to you, they may come to your bookkeeper saying, what does this mean? Or I don't understand it, or there's not enough detail in this transaction. That would never happen if I'm doing the books because I just flow everything right from QuickBooks right into the tax software, and your taxes are done in days, not in weeks or months. I also happen to be a QuickBooks Pro advisor, which means I have discounts available if you wanted to track your accounting online simultaneously. Let's say with QuickBooks Online, where you could use an app. So you don't have to call me and see how your businesses are doing. You just go to your phone or go on your PC. And again, because I keep everything in real time, you know exactly how each of your businesses are doing, how each of your properties are doing, basically however you want to keep track of your business. Business owner access is essentially what I was just talking about. And app integration and ease of use. Again, it's very easy to use these apps. If you have a payroll, I know of apps. Gusto is one of them, for example. If you had a payroll, that's also an app on the phone. It integrates with QuickBooks. There is property management software and apps that I'm sure integrate with QuickBooks. So again, that's part of the whole overall service that I do. I don't just focus on bookkeeping and I only know QuickBooks and that's it. I work with other applications to make sure that everything is integrated so that all of your information is in one place.
Perfect. Thanks so much for that great overview.
Mhm.
Tell us about your fractional controller services. And for a lot of my clients, they're probably wondering, what does that even mean?
Right, exactly. So here's really where our firm differentiates itself. Based on my history of being a corporate administrator and in management, what I really wanted to do is, and what I've learned is to work with small businesses, again, work with families, high net worth individuals, where I say, you know what, you've got some investments or you've got a business. What you need to focus on is managing those properties or selling your product. I have experience not just as a tax person and a bookkeeper, but also as a manager and an operational manager. So I will do everything for you, literally everything, whether it's keeping your books, paying your bills, negotiating rental contracts with you or loans, basically opening up your mail, dealing with the states for franchise taxes or whatever purpose. Literally everything that you can think of. If you have a service that I don't do personally, maybe it's travel, you travel a lot, I will get you a travel agent and say, here are some great travel agents I know. If you need corporate insurance, I don't do insurance, but through my network, I know some great people who do insurance at all corporate levels, large and small, et cetera, et cetera. So really, you're getting that service, so you don't have to worry about it and you could sleep at night. Again, what you're getting and what I like to think of is we're essentially a boutique firm. We're not looking to have hundreds of clients that do fractional controller. I would be quite happy if there were a dozen, let's say, and we have some room to grow. And of course, we do have several. I'm not starting from scratch. And what I am, when I have a client, I consider them a partner, a friend. You can call me up anytime. We are available, myself and Marianne, 24/7. We're here not just to do your books. Again, a bookkeeper you may hire, they do your books, they go home. we work with you as a true business partner. I am a small business myself. I understand the issues that small business owners have. And again, based on my experience, my tax knowledge as a CPA, my organizational knowledge, being a registered investment advisor, there's probably nothing you can't ask me that I can't help you with to grow your business. And even the next point down is integrate your personal and business finances. Again, several of my clients literally have me do everything, including I have access to their personal bank accounts and pay for their insurance, and I deal with their insurance agents directly. So depending on how much control you are comfortable giving up to a CPA, I can literally just take care of everything for you, paying your personal credit cards, you name it. The last thing, which some people might not think of, is file management. Again, based on my experience, I have a very specific way that I deal with in managing people's files. Again, whether that's just invoices and bills they pay, whether that's contracts, rental agreements, or what have you, where I have a very detailed file name instruction that I use so that if you came to me today and said, in 2014, I did something with Lee Johnson, I don't remember what it is or exactly what day, I just type in their name and boom, it pops up. So a lot of people, of course, if you have your own business, you've just got everything on your PC and it's kind of all over the place and you don't know. Part of what I've done organizationally and what my wife helps me with and her experience in administration is we have a great filing system where we could find anything anytime. And we really try to be as paperless as possible, which I know is maybe difficult a little bit in the real estate world, but if you looked at my office, you would say, where are the papers? I don't understand. You said you had dozens of clients. Why don't I see any papers? Why aren't there filing cabinets? To me, everything needs to be digital, needs to be easily accessed and available to my clients at all times, 24/7.
So really, in reality, what we're talking about here is a mom and pop feel organization, just like we are, where you can handle just the simplicity of tax filings all the way up to the entire portfolio and business and personal finances, et cetera. And it's really tailored to the client. And the thing that I like so much about that is you are building a solution and a plan for each client individually, and your prices are fantastic. And so I think people hear a lot of this and they think, oh, this is too good to be true. Oh, this is going to be so expensive. And in reality, it just isn't. And so it's back to the old way of doing business, going above and beyond, making sure that you're able and willing to do anything the client needs instead of just being a chop shop where they're in and out, taxes are filed, and there's no real thought and depth going into anything. Because of course, the more knowledge you have, the more you're going to be able to pull out those deductions and pull out those expenses and creative ways of being able to limit tax liability, especially in this type of market where the majority of people that are investing are making very good money. And so let's talk about the actual tax process, how that works, and what you handle.
Right, sure. So tax returns, again, I've generally doing the most common tax returns, the individual 1040, the partnership 1065, the S Corp 1120S, or a C Corp 1120. There are some things I am not. I am not a trust specialist. If you have trusts or estates or that sort of thing you're dealing with, I know people who do that specifically, and that could be rolled into what I do. But I'm always very honest with people. I say, this is what I do, sort of very, general tax returns. If you have a specific issue, then I would send you to that person, someone who I trust. Self-employment tax, again, these are just issues that come up that people need to be aware about. A lot of people start a business and they have this LLC or they're a sole proprietor, and then at the end of the year they say, oh my gosh, like what happened? I thought I was in the 20% tax bracket and I'm paying 35% in taxes. People don't necessarily realize that any income that flows from a business like an LLC, that you're basically paying both sides of Social Security and Medicare. If you're an employee, you see it taken out of your paycheck. A lot of people don't realize that your employer also matches that. Well, when you're in business for yourself, the government makes you pay both sides. So that's something that people should be aware about so they're not surprised.
Now that goes back to the sub-S election, and a lot of clients, I've
Right.
had this call many a time, and they say, well, I made so much this year, I want to sub-S elect this year. But that can't be done at the last minute.
Absolutely not. There's a deadline. It needs to be done by March 15th. of the year in which you would like to take that election. So this year it's too late. You have until March 15th of 2020 to be taxed as an S Corp for 2020.
Exactly. And so being in front of that, being in communication with your CPA, making sure that you're looking at interim finances, those are the things that help you decide whether or not that's a path to take. General rule of thumb is if you have a very, very large portfolio and you're doing a lot of sales and 1031s and all these types of things, you're taking boots, generally you're going to need to start looking at that sub S election. And certainly if you're rolling other things through that same company, then as that income goes up and that net income goes up, it just becomes a higher and higher capability and need for something like that as an alternative way of avoiding or reducing your tax liability.
Exactly. And I'm actually going to skip over that next bullet point and go right to estimated taxes, because that sort of goes to what you were just talking about, is that, the investment industry and real estate investments, your income will fluctuate up and down year to year, month to month, quarter to quarter. However, again, what people need to realize is that the government is expecting you to pay tax on your earnings. In theory, you can just wait until the end of the year and it's April 15th or October if you extend, and say, well, I'm just going to pay all my tax at once. However, there will be penalties if you don't make a quarterly estimated tax payment based on the income that you've had in a particular quarter. Again, it's a personal choice, and I help my clients walk through that. The first thing I do is I send out an email saying estimated taxes are due. Would you like to make a payment? Again, some people don't. They just say, I would rather hold on to my money and be penalized a few $100s at the end of the year. For the people that do want to make estimated taxes, payments, especially if I'm doing the books, it's very easy. If I'm doing the books, I have the profit and loss statement right there. And I could tell them exactly, if you put this in the tax return, you would owe X amount of taxes. I suggest you pay this. It becomes a little more difficult if I don't do the books, because then they have to depend on their knowledge or information their bookkeeper is giving them, which, to my earlier point, may or may not even be accurate from a tax perspective. But it's very, very important to keep estimated taxes in mind. The next thing is the tax advantaged retirement plans. You have a business, do you have IRAs? If your income is significant, do you have a 401k? If you set up an owner or a solo 401k, which you can do if you are a one-person business and you can put away $50,000 to $60,000 of your net income in a tax-deferred retirement plan. So again, I don't set up the retirement plans, but when I see a client's income and I know obviously the different accounts they have, if I do their taxes, I can suggest to them, you should probably look at these retirement plans. And I have a whole series of investment advisors, not only the people I partner with, that I can refer them to, again, based on whether they're a small business, a large business. Do they want an Edward Jones or a Charles Schwab? Do they want a boutique firm? I can lead them in the proper direction. Section 199A deductions. This is just a general point that people should be aware of since last year, that for the most part, there is a 20% write-off of your income from pass-through entities, such as LLCs, or if you're a sole proprietor. So if you made net income of $100,000 last year in your LLCs, you were only taxed on $80,000. Now, of course, there's all sorts of other things we won't get into about the tax law changes, the changes in standard deductions and the exemptions and the child tax credits. But that's just the benefit that I was surprised actually that people didn't know about, especially since it's so generous. Capital gains tax, I sort of touched on before a little bit, so I won't bother with that now. And opportunity zones. I didn't know if you wanted to lead into that, Leah, a little bit, or if you just want me to go into it.
So I'll give a little bit of leeway. So a lot of the properties that we deal in for our new construction and some of our revitalization and rehab projects are in opportunity zones. Now, with the way the market is right now, you guys know I'm not preaching 10-year holds. I'm not preaching 7-year holds. That said, there are unique opportunities because of where these properties are located for those of you that would look for a longer term hold, or if and when the market does start to soften or drop, that's something that we will look more heavily at while we wait for it to turn. Of course, we're all hoping that's not going to happen, but if and when it did, this opportunity zone play is something that will definitely become at the forefront of real estate investing in these submarkets. So Howard, why don't you go into a little bit of overview about that? And then probably what we will do is do a separate class on opportunity zones and have a few guest speakers that will go over it more in depth as we start looking more and more at these areas that have been labeled opportunity zones.
Right. Yeah, Leah, thanks for that. And I just want to tell the people who are listening on the webinar, you are very, very lucky to have Leah and OmniKey there for you regarding this topic, because I can't tell you how many people have come to me with interest about this and they don't know about it. They don't know the details. They don't even know where to go. So the fact that you have a resource that from the real estate perspective really knows about this and what it's about, it is really super key. And that's a benefit that just has no price. As a CPA, I think of everything as a very technical term. So, I think of the little things that people don't know. You can't just sell your property and then buy something else. You have to actually form a corporation. And then after you form the corporation, you have to file an election with the IRS saying that this corporation is investing in opportunity zones. And then, of course, once you do that, there's different forms to file when you do your taxes in order to defer your capital gains. So that's sort of my job on that. Leah would be the specialist saying, here's where you invest, here's the strategy, perfect what you said about 7 years and 10 years, because you do get increasing tax benefits depending on whether you hold the investment for 5, 7, or 10 years, but you obviously are up to date on that. So from my perspective, it's not so much about, what to do. It's about once you do what you do and you get that advice, it's, are you filing the right forms? Are you doing it in the right way? Because if you don't follow the letter of the law with the IRS, they're managing that tax benefit and you will not get that tax benefit.
It's just like a 1031. One wrong step and the entire 1031 is blown. And the real problem is the way that you find out you've done something wrong is in an audit when it's too late. And this is why we connect you with the professionals and the people who know what they're doing. And we make sure we're giving you the guidance within the letter of our license to make sure that you don't make a mistake on the front end. I have a lot of clients who come to me and, 1031 exchange is a great example. Day 43, they've got 2 days to identify and they're calling us saying they need a property. Or some people will call us day 70, day 80, say, hey, I have one that blew. I need to change an identified property. This other vendor couldn't make it happen. And so you never want to be the bearer of bad news on the back end. So if we can get you the information up front, we can help you with that process, whether it's something you're doing here, whether it's something you're doing across the country. That's always the best position for you to be in and for us to be in, because then we can help you before you make a pitfall, because one pitfall blows the entire thing. This is not a ask for forgiveness and still get some portion of your savings or your tax offset. No, this is if you don't do it right, you're done.
Right. And one more point I just want to mention about my firm and reiterate is it doesn't matter if we're only doing your taxes. It doesn't matter whether we're doing bookkeeping or fractional controller services. If you are our client, you can call me anytime during the year. And I encourage people, I say, please call me before you make a major investment decision so that we know we're doing the right thing, at the right time, at the right place, and filling out the right forms, because it's always worse to impossible to fix everything later. And I'm essentially offering it for free. Again, I don't charge people hourly rates to come into the office. If you're a client, I don't care if you're doing a personal tax return for $500 or $600. You have my ear the whole entire year for any questions you have. I'm taking a personal loan out of the bank. What's a good rate? I need to buy a car. What's a good dealership? Whatever it is, and especially obviously with business decisions.
Fantastic. Well, I really appreciate all this information, Howard. I'm so glad that we had you join us. I do think that many of our clients are going to have follow-up questions about some of these items, and certainly we'll want to contact you to get some pricing. That is really the age-old question, is pricing. Can you give me kind of a general idea of what, for a typical tax return, your average cost is?
Sure. I'll tell you exactly what we charged last year. And luckily, again, because we don't nickel and dime people, our cost structure is pretty straightforward. For a 1040, we charged $500. The only forms we charge an additional amount for are Schedule Cs, if you have the LLCs, or Schedule E, which is where your rental property goes. If you have multiple properties, there is only one Schedule E. And for each of those, we charge an additional $125. If you have an S Corp or a partnership or a C Corp, we were charging $950 to do those returns as well, in addition to what we charged for the 1040.
Perfect. Well, thank you again for joining us, and thank you everyone for being here. And for those of you that we're sending this out to after the live broadcast, all of his information is here as well for you on the slide.
Well, thank you very much, Leah, for the opportunity. I really appreciate it. And thank you to everyone who's listening.